Testing 1, 2, 3. All right, can you guys hear me now? Let me know if you can hear me here, guys. But you still can't hear me? Oh, you can hear me? Okay, good. Sorry about that, guys. Man, you know what? Technology. I am old enough to remember before we had all this great little technology. It was supposed to make our lives easier, and all it does is make more work, you know? Anyway, good to have you guys showing up. I'm Christopher Inks with Texas West Capital. We do this every week. And usually, you know, we'll bring on guests and whatnot. Fibbo tries to be with us every other week. He did have something come up this week, though, last minute. So we are shooting for next week. So make sure you guys tune in next week, definitely, to get Fibbo's takes on some charts and whatnot. And, you know, him and I kind of go back and forth and discuss them for you guys. But anyway, yeah, before we get going here, please, I asked you just go ahead and hit the like button, you know, share the link, leave a comment, follow me, you know, wherever you're at, Twitch, YouTube, Facebook, Twitter. That's where we're simulcasting all this on. It just helps to get the algorithm to pick up the stream a little bit and kind of share it out there more. So if you find, you know, what I do useful here or beneficial in any way, I would appreciate that because it'll help other people find it as well, okay? I do appreciate you guys. Hey, listen, we have the markets going no today, right? People actually quite a bit of fearful today. The jobs came in, and this is really kind of due to the jobs report, right? So it came in today. I think they were looking at for 175,000. They came in at 114,000. They revised May's numbers down 2,000, and then June's numbers down 27,000. Now, for those of you that don't understand, I know there's a lot of, oh, the Fed is, you know, screwing with the numbers to make you believe, blah, blah, blah. Listen, guys, at the end of the day, remember the BLS, which is who gets the numbers and puts it all together, right? They send out, you know, they're looking for, the companies have to send them the numbers, okay? They have to send them the numbers of employed and all that kind of stuff. And the companies a lot of times don't do it by the due date. So you'll see revisions because they'll do it afterward, right? They'll get it afterward. So the BLS gets the numbers in and then they have to revise the numbers with that. But it's also, you know, it's not, they don't have to send the numbers in. It's voluntary. So, you know, it's just a survey thing that's kind of sent out there. So, you know, there's other things that put into it. I'm not saying the Fed doesn't change the way sometimes in which numbers are looked at, but you need to understand that the Fed doesn't just have like this magic book of who's employed and who's not employed. They send out the survey gets answered, comes back. And then from there, you know, they can post numbers, whatever they have from that, but then they have to revise because a lot of companies don't actually report when they need to get it for the jobs release. And then they, you know, they report it afterwards. So they have to update it, they have to revise it. So just so you guys know, okay. There is that going on. But anyway, so yeah, jobs came in soft. So, you know, they were 200 and whatever it was, 220 something last, 220,000, I think last time. And then of course, like I said, down almost 30,000 to about 179,000 or something revised down. We were supposed to, you know, we're looking at 175. We got 114. Unemployment is, we were looking at 4.1. We got 4.3. So, job growth is slowing, unemployment's gaining. Here's the thing, though. Unemployment is still historically low. Now, it is at the highest point it's been, I believe, in the last 3 or 4 years. So that's something to look at, right? We also have to look at where the job's coming in, and I haven't had a chance to catch up with that at the moment here. But some other things that came in today. Let me see here. Wage growth. So wage growth is this measure for, you know, kind of how do you gauge inflation pressures. So it slowed to 3.6 year over year, which is down from 3.9% in June, right? So on a monthly basis, wages increased 0.2%, which was lower than the 0.3% gain seen in June, but it was still a rise monthly, right? Labor force participation rate, which means those are actually trying to look for a job, went up from 62.7% to went up to 62.7% from 62.6% in June. Okay. So, a lot of this going down there. Higher lows, what's up? It says soft jobs report means higher chance for rate cut. Yeah. So if you guys have been following me, I've been looking for a quarter point, 25 basis point rate hike, or I'm sorry, rate cut there in September. And it looks like now we may actually get a 50 basis point. Now this is if you look at the CME Fed Watch tool, that shows a 79.5% chance of a 50 basis point cut, 20.5% chance of a 25 basis point cut. But this is also just after the news came out. So if you watch the Fed tool, the CME Fed Watch tool, you'll notice that it does fluctuate throughout the month leading up to the decision. And so I think we're likely to see that depending on how things come out over the next few weeks. We could see that drop off there. But again, I think we at least get a 25 basis point rate cut. That's what we've been looking for. Right now, there's a good chance we get a 50 basis point. 25, guys, honestly, really isn't much of anything. Okay, it's really just nothing. It's a nothing burger basically. 50 basis point rate cut. That's a little bit more of something. But yeah, if you're looking for that, again, how does liquidity enter the market? Liquidity enters the market in two ways, right? Or it enters the economy in two ways. One is dropping the interest rate. So if the interest rate is cut, that frees up dollars to go do things other than, pay a higher interest. It encourages investment, right? Lower interest rates, cheaper money. And the other play, obviously, is that money comes in through the system from printing more. And now there's different ways in which that does it. Japan was really the first kind of QE when they did it back in the 90s. We started a version of it in 2010. And then another version of it in 2019, 2021, that area there, or 2020, that area there. And there's potentially another way coming in now with the way in which treasuries are issued. But nonetheless, that's more money coming out there, right? Now, if you're interested in Bitcoin, you should be interested in global liquidity, right? I would even say that for stocks. Why? Because the U.S. stock market is still considered the safest market out there. So that's why we have so much foreign investment into our stock market. So, if you've got global liquidity increasing, that money needs somewhere to go. And usually it's to the markets, right? Risk on. So, when we're looking at, by the way, if you're interested, I've kind of showed this a few times. I want to keep showing this because people keep asking. If you're really interested in learning about global liquidity, I've found this is the best thing out there. It's called Capital Wars, The Rise of Global Liquidity. It's by Michael J. Howell. I get nothing for showing this to you guys, all right? I show it to you because if you're serious about understanding global liquidity and how it goes, he's the guy to look at. He's got a PhD in economics. He's had some real-world experience. He owns cross-border capital, I think is what it's called now. But he is the global liquidity guy in the world, right? He's the guy you look at. So that's his book. I think he's got a Substack as well. You have to look for him there that you can subscribe to. It's going to cost you a little bit, but the information is pretty great. By the way, also, before I go any further here, I finally got a copy of Soft War. I finally got that. So I missed it the first time it came out. Life got in the way, and I kind of kept putting it off and forgot to buy it, and then it went out. You guys might have known it went out of publication for a while. And then Amazon just got some back in just recently. So I ordered that this week. Can't wait to go through that. If you have read that, do me a favor, leave a comment under the video so I can look at it afterwards and kind of check out what you guys think of it, what you agree with, what you don't agree with. Is it good? Is it worth it? Kind of things like that. Appreciate that. Okay. So yes, soft jobs, increased likelihood of a rate cut, increased from 25 basis points, probably 50 basis points, should bring some liquidity in. But here's the thing. Everybody's freaking out right now. Everybody's like, oh my God, it's the end of the world. Everything's, that's it, right? That's it. That's the end. I'm not so sure that's exactly what's going on yet. Let me go and pull up a chart here real quick. Let me do this. Let's start with the Nikkei, all right? Because the Nikkei has had its largest drop in forever. I think it was 6% already today. So let me show you something there, and then I'll show you with the other charts as well. All right, here. Let me get this down here. There we go. So this is the Nikkei over there in Japan. And they had this big drop. And so here on the daily, you've had this drop here, right, of, again, as we go here, of about 6%, I believe. Yeah, 6% there, which is a little bit more than what it had the previous day there, right around, 5.75 there. But here's the thing. If I'm looking at this, here's what's interesting. If I look at this, we see kind of what's going on here, right? This looks like 3 waves up. So here's where you learn things, guys. Here's where a lot of people are like, oh, I don't want to learn Elliott wave because it's so subjective, blah, blah, blah. That kind of mindset, guys, is going to lose you a whole lot of money. Because if you're looking at this right here and the drop, you're going, oh my God, it's the top, it's the end. But if you look at this and go, this looks like ABC and then an ABC, so a WXY, it's 3 waves up. If you've got a 3-wave up that breaks out above the previous swing high, and it's not part of an ending diagonal, which it is not here, then that suggests this is a flat correction that's printing here. Now, it could have been up at this point. It could have been 3 waves up and then 3 waves down, and it did like a running triangle. But it's broken down below wave A, which means it's expanded flat. So if we look here and we assume you got a 1 and a 2 here, and we get this pullback from wave 3, so potentially something along the lines of this here, right? Whoops. Try that one more time. Now, I didn't go in here and count this exactly, but so this one may be a little bit different. But basically, you get a 1, 2 in this area, and then you get, a 1, 2, 3, 4, 5 gives us a 3 and a 4. So, I mean, from here alone, right? From where we are here alone, we've pulled back 38.2. That's our usual wave 4 pullback. Okay? Now, we could pull back to 50%. That's the secondary target. So we could continue pulling back toward 32.5 or so, 32.4. But if I'm looking at this, my initial thought is this is just a flat correction, which means we go out higher. And you can look here on the weekly, RSI has almost reset into oversold here. Whoops, we're getting down there, right? But more importantly, Stochk RSI is well reset into oversold here. We are above the pivot here on this weekly time frame. We've just basically, we're getting to this previous, again, depending on however you want to look at it. You want to look at structure here. That's our previous kind of resistance here. You can say we hit it, and then we broke out, right? All we're doing is coming back and retesting that as support. You want to look at it another way? Guess what? Here's another way, guys. This right here, this area right here, is what we call a fair value gap. Doing its job right here. We want to look at another way? Guess what? Look right here. Low volume node, almost non-existent volume right here because we had one candle that just shot right up through it. No, low volume nodes usually work as support or resistance, at least the first time you get into them, right? That's why we got right here. That's why we got these rejections right here. Let's pull this across here. He says low volume node right there. That's why we got rejected and rejected and rejected and rejected. And then we finally broke out through it. We never came back and retested, though. Here we are retesting it. So I think you've got a lot more work to do to prove to me that the top is in and we're heading much, much lower than I do having to show here. I've shown you multiple ways here that you can look, multiple different ways you look at all this stuff we teach, guys, at Texas West Capital, right? We teach all this because all of this together, these are all tools. The way I look at this here are all tools that help you understand how and why the market moves like it does. It helps you read it. It helps you understand it. So you're not the sucker getting left behind. That's the goal, right? That's why we do what we do with our group coaching. Okay? But this right here, this looks like 3 waves up, which would suggest this is a flat here, an expanded flat. And again, if we're rallying, let's say from right here where we're at, that means we'd have a minimum expected target up there just off this local count at around 48,560. All right, almost 50,000 right there. Now, if it were to pull down, say to the 50%, if it was to fall through this fair value gap here, get down to the 50%, that would give the Nikkei a target up here of 50,355. So what I'm trying to say is when you have the big moves in a day, zoom out. Stop, get off your 15-minute time frames, get off your 1 hour, your 4 hour time frame, zoom out to the daily, the weekly, the monthly. Because emotionally, you're going to get caught up in what's going on in the immediate here, right? In the immediacy, this moment right now. But you have to absolutely zoom out larger to go, okay, what does this really mean in the context of everything? All right. So if I look at the Nikkei, again, to me, this is what it looks like. Oh, man. Sorry about that. I got the hiccups here. We got a bit of bearish divergence here. We have this, this shooting star candle up here at the top. And so, you know, you should have been looking for a potential reversal on that weekly there. And of course, we had a confirmation with this large bearish engulfing candle here and then follow through down lower here. But for now, the way this looks at this point right here, it looks like a flat correction. We could come down a bit further, but ultimately should head up higher there toward that 50,000, 48,000, 50,000 area, right? Troy says, not to mention the 10-year DXY and even oil are having a down day. So that would also imply that liquidity isn't running for risk-off assets, right? Yeah. Everything, it was just everything moved at once, right? Everything got scared at once. So, you know, it wasn't like what you would normally be looking for, okay? It's a great point, Troy. Murray, what's up? Good to see you, man. Revy, Bangkok. Chill me, Gachil. Is that what it is? Let me ask you this. Wind Moon. For what? Wind Moon, whenever it happens. I think we're probably pretty close to getting, we'll look at Bitcoin in a minute here, but I think we're probably pretty close to getting the breakout there. So I would be watching for sure. Let me see here. Frank, what's going on? Mark, JP, Jay, I see you guys. Jose Sanchez, what's up? Chef Webb, good to see you guys checking in. Always good here. Higher lows. Victor, let me see here. See, that's, you guys all tell me you had no sound, and I was just sitting here talking, right? I was focused on you, just not on what you were typing in. Diego, what's going on? Markets top after cuts. Well, actually, that's not always the way it happens. So it depends. You know, this is something I've talked about multiple times on the stream here, so I'm not going to go into it in depth again today, but it depends on what's going on what the underlying is, right? If there's a recession already going, then yes, usually you're going to get a market top. But if there isn't, then you're not, right? And there's a lot of different ways to look at it. Like I said, I've talked on previous streams. Don't have time for it today, but yeah. Hey there, Cecilia. I see you as well. And Data, of course. Nah, man, no reason to be scared. No reason to be scared because we're taking that bigger view, right? It's always about, what I notice is a lot of new traders come in and they get really sucked into the 5-minute or the 15-minute or the 1 hour time frames. And it moves so much, right? There's so much noise in that gets your emotions going a lot. And so, you know, I always teach people, listen, you have to, even if you're trading the very small time frames, you got to understand what's going on in those larger time frames. You have to have a larger time frame point of reference. Otherwise, you're just throwing your money away as a trader. I'm going to tell you, 30 years, guys. 30 years. No, not, you know, Diego, you didn't say market tops. Somebody else said that. But, you know, 30 years of doing this, that's what I figured out, right? You have to understand what's going on in the larger time frame, even if you're trading those smaller time frames. It helps mitigate your emotions a bit. Now, it's never easy to deal with your emotions, guys, even when you do this for a long time. But it gets less difficult. You know, practice, like everything else, practice, right? So yeah, so that's what we're looking there on the Nikkei, right? So let's jump over here real quick to the Nasdaq, the SPY, and the Dow Jones here. Okay, so we had basically three-way movement down, rally up, and we broke down. Three-way movement down, rally up, broke down. Right here, potentially 1, 2, and then 1, 2, 3, 4, 5. So potentially 1, 2, 3 here. I'm sorry, I mean 1, 2, 3 here, and then coming down. But three waves are corrective. All right. And we're seeing that we're trying to find some support around these daily S1 pivot areas. Now, the SPY here is taking the biggest move below that daily S1 pivot. And we could end up coming down a bit further because, as you can see on these here, the Stochk RSI on the bottoms are just popping out and trying to pull back into the oversold. RSIs are coming down below neutral, potentially getting ready to reset into oversold. The pullback off this rally right now is only 61.8% on the NASDAQ, around 50% on the SPY, and between 50 and 61.8 here on the Dow Jones. So far, this becomes a three-wave pullback here at some key areas where we would normally look for that reversal. Now, the other thing we look at is generally wave C is 100 to 123.5% of wave A. So here on the SPY, you can see it's almost at the 100%. I'm seeing 123.6%. So we could continue down here toward this S2 pivot area and still be within that range that we would normally look for. Again, this is a guideline, not a rule, but when we're looking for C waves, that's generally what we look for. Okay. With the Dow Jones here, same idea. We are between the 100 and the 123.6. And then with, the NASDAQ here, if we look at this as an A, a B, and a C, we'd have to get down here around that, kind of around this 78.6 area, 17,706 to kind of get that. But again, these are guidelines, not rules. It's just where we generally look. The other possibility here, which I don't think is right, be an A, B, C here, and then an A, B, C. This is quite a big move up. This would suggest that this is if this is WXY or if this is an ABC, it would be that middle wave, most likely there. So what are we looking for? Well, we're looking for an impulsive breakout and close above the daily pivot. If we get that, you're looking at new all-time highs. Period, end of sentence. That's really what we're looking for at this point here. Which means what? Well, it means if NASDAQ is done here, it means the NASDAQ is going to be targeting up here at around 22,368 or so based on the height of that pullback. Now, that's a minimum expected, right? This could be a 1 and a 2 here. You get through it, you get even further. But, we're just going to look at minimums here. Same idea here. Minimally, we'd be looking up here at 589 on the SPY. Minimally here on the Dow. Oops, hit the wrong one there, but that's fine. Minimally on the Dow, we're going to look for a target at 42,683. Now, usually what I look at when I'm looking at pivots here, when we get the drop down through the pivot, I look to see, do we get support on the S1 and break back out? Because if we do, again, that's, when you're trading pivots, that's what you're looking for. So we would look for this rally up off here to break out. If you get down to your 4-hour, your 4-hour isn't quite reset yet. Again, right here, look at this. It's an ABC, it looks like here. Or this could be one, it's a pretty big, I don't know, it could be one ABC up, ABC down, then 1, 2, 3, 4, 5 here as a flat correction. So you get an A here and then a B up here. But then you go 1, 2, 3, 4, you probably get a 5 a little bit lower. So again, that would get us here maybe resetting into oversold. But I tell you this because what we should be watching for now is potentially a little bit further and then looking for that possible reversal to come up, right? What's up, T. Shroomy says 6-month Bonds showing a reprice. Let me see here. Kimosabi says analysis should be higher time frames. Yep, exactly. So yeah, again, guys, when you're getting these big moves in a day, like in the day, or in a quick, short amount of time, you should be zooming out. Or if you're getting multiple big days kind of movements, zoom out to the larger time frame. Get your reset into your emotions. Look what's going on with these things. Because all of a sudden they go, okay, well, maybe it's not as bad as it looks like on that time frame, that small time frame where it's where it's flying, right? It's like on Bitcoin. Bitcoin, we know, makes big moves, right? But if you're showing the 1 minute time frame, it's going to look absolutely ridiculous, and we don't do that, right? So let's kind of keep on looking at here. What do we got here as far as charts go? We've got small caps here, right? RTY. So this is the futures for the Russell 2000 small cap index. And so I'm looking at this. Remember, we had this initial target up here at 2378.60, which gets us pretty close to that all-time high, right? But we've had a pretty deep pullback here. Right now, it's kind of looking like we've got a 1 and a 2, and then a 3 and a 4 here. Again, we got the pullback into the S1 pivot. So I'm looking for a rally out of this S1 pivot that carries, impulsively and breaks out above that pivot, the daily pivot there, right around 22.10, 22.11. If we can get that, I see no reason to believe that we won't get a move up here to 24.70 and 90 cents, or 24.70.90. And that's just based off the height here of this wave 4. See the height off there. That will give us a slightly higher new all-time high. And so, yeah, if we can get that, I mean, this is a deep 4. If this is a 4, it's a deep 4, but it hasn't overlapped with wave 1. Okay, so it's still, possible here. Now, if it does pull back into wave 1, maybe it ends up being, that 5.5 of 1 is done right here. And if it is, we'd look for wave 2 to target down here around 1952, right here into this low volume node, right here into the triangle, exactly where we would expect it, right? But if we can get the rally here and break out and extend this up toward that target area, wave 2 then has a target of right around 2000, which is right around the EQ of the range, right around the middle of that triangle, right around that triangle support, actually, into this smaller volume, lower volume node as well. So, right now it becomes, do we see, the bounce here and the rally that carries us above that daily pivot, or do we see the further, the breakdown further into that wave 1, which suggests that the wave circle 1 there is done. Wave circle 2 comes back. But here's the thing. That's 1 and 2. Guess what happens after 2? You get 3 up higher, new all-time highs. Then you get a 4, and then you get 5, newer all-time highs, right? So small caps are still rallying. Small caps are just beginning their move, right? Does that make sense? So it's kind of hard to say, oh, the top's in when small caps are just getting going. Because what happens with small caps? People put money in small caps because they're more, so this is the way you have to look at it. Small caps are more sensitive to the things that are going on, right? Economically here in the US. Because generally speaking, most of their sales are here in the US, okay? So if you have people putting money into small caps, that means that they don't think that things are really awful, like contrary to what you see all over social media, right? With your armchair economist and whatnot out there. But this is the way that people are showing what they think, right? In the aggregate. People are not going to put money into small caps like they've been if they believe that the economy is going to shambles, is in shambles. They believe that they're looking for continued growth. And you go, but Chris, man, but unemployment's 4.3%, man. We only did 114,000 jobs. We missed our jobs number, man. It's all going to hell, man. Well, again, 4.3% for the unemployment is still very historically low. It's just the highest we've been since COVID. I mean, that's what we're looking at, basically, since, as COVID played out there. So, you got to get off the one news event cycle. You got to get off the short-term charts, and you have to understand what's actually going on here. Okay? Does that make sense? Because again, you can sit and you can say all these things about what you want to believe or what people are making you believe about the jobs number and all these other things. But when you look at the charts, if you look at what people are actually doing, where is their money actually going? That tells you a hell of a lot more. And again, because the small caps here, the Russell 2000 small caps, are much more sensitive to what's going on in the U.S. in terms of the economy and whatnot. The way you look at it is, if people are putting money in the small caps, it's because they believe that the economy is going to continue to pick up. Okay? And so you look at that, and then you also got to bring in, again, we brought up global liquidity a minute ago, because that is the thing, guys, right? At the end of the day, global liquidity flows over the last 20 years or so, 20 to 30 years, have really been what drives overall asset prices higher. And if you believe that liquidity is going to increase because central banks are cutting, by the way, they cut it over there in the UK, right? Bank of England cut over there. First time, few years now. So they beat us to the cut. But, we're looking at China. China's throwing liquidity out there, right? China's employing liquidity. We've seen that. We've got the Bank of England over there cutting rates. We've got the central bank here looking like they're going to cut rates, potentially even, like I said, 50 basis points versus 25 basis points. The way in which the Fed is funding the government's needs with treasuries, the way they're doing it suggests that there's this kind of what they call this stealth liquidity, stealth QE. So it's a way of stealthily bringing new dollars into everything out here, right? So if you're looking at all that and you think that lower rates, if you think cutting rates is going to increase liquidity and all these things, well, then why would you in the same breath say, oh, the market tops in? Doesn't make a whole much sense, right? But again, it's in understanding how people are putting their money where, right? Or where people are putting it and what that actually means. So when I look at this, again, anything can happen. I'm not saying these things absolutely have to happen, but I'm saying trading is about probabilities, not possibilities. Okay? It's about probabilities, not possibilities. Anything's possible. You go with what's probable at the time. And then that's why risk management is so important, proper risk management. Because that's what's going to save you when you're wrong. Okay? Isn't the IWM chart a breakout rejection, though? What, right here? Breakout of what rejection? No, it's a pullback. I'm not sure where you're talking about rejection. Again, if we're counting from here, 1, 2, 1, 2, 3, 4, 5 is 3, A, B, C, D, E is 4. And then looks again like 1, 2, 3, potentially 4. But, it could be, again, it depends on how you're counting this interior here. This is definitely a third wave, all this volume. You see the big volume here. You got the large candlesticks. If we look here, as I was talking to you guys, those of you who were following me last year, again, we were talking about this looking like it was accumulation here and looking for a potential spring to hit here, which we got, and then we got the move up. So, I've been telling you to be long, Russell 2000 since the end of October here. And we've rallied up extremely well. So, yeah, if I'm looking at that, I wouldn't say it's a breakout rejection. It looks to me like a pullback at the moment. So hopefully that makes sense. Let's see here. Would a bigger conflict in the Middle East that gets the U.S. involved be bad for markets? Generally speaking, there's always a knee-jerk reaction to news events and economic events and war events. Okay? So you're definitely going to see, if something were to happen like that, you'd probably see a knee-jerk reaction. But does it mean that that things are going to go down because there's a war over there? Well, let's do this. Look at the Dow Jones. What happened on September 9th? Do we know what year that was? Do we all remember? Here in the U.S.? Because that was a war, right? We were getting into a war then, right? And so what happens during this time? Well, we're already in a downtrend. So it's not that being in war caused a downtrend, right? Does that make sense if you're looking at it there? You can see that we had the swing high up here. And then we had the swing low. Is it right here? It's either right here or right here. We're going to swing high into another, a lower high into another lower low. I mean, so we're in a downtrend here, right? So when we're getting down here to September 11th, right? We're already in a series. We're already in a downtrend. So being in war, going to war, didn't actually put us into a downtrend. It didn't make the market reverse. The market was already in a downtrend. And then here, barely a year later, we bottomed out and headed back up. And while we stayed in war. So two things I show you from this. One is what I always talk about, which is that trends are already in the market, right? Even war doesn't create a new trend, right? It's already in there. These news events and whatnot may give you a knee-jerk reaction, but the trend is already established. That's the first thing, as I just showed you right here, okay? The second thing is that just because you're in war doesn't mean that your stock market goes to crap. Again, just 1 year after entering, just 1 year after the 9/11 thing happened, right? Just over 1 year later, we bottomed out and we were nothing but higher after that. And we've continued higher after that, other than, of course, when we had the great financial crisis here, right? In the grand scheme, in the bigger picture, let me show you something here. This whole basically 2000s to 2010 kind of era here, that's just a reaccumulation range. This is just a reaccumulation range. Buying climax into your selling climax into your your ST. I'm sorry, your automatic rally here into this drop in your phase B here to a spring. You rally up until last point of support, rally up, last point of support. We get a breakout. It's just a large accumulation range from January of 2000 until about February of 2013. So again, understanding these things that we teach, that I teach over there at TWC helps you ground yourself in what's actually going on with the charts, right? It gets you off the news events and you start looking at it. Again, most people believe that, you have rate cuts and that leads to a recession because most of the time that's been what happens. But that isn't the whole story, right? That's just the very general kind of, I guess, the third grade understanding of it, right? And I don't mean that to be disrespectful at all. Please don't feel that way. Because, these things that I'm talking about are the things that people don't really understand. Now, the great thing I really love about Bitcoin is that y'all are really interested in learning more. That's absolutely fantastic. I've never in my life growing up and being involved, in economics and everything else, I've never seen so many people so interested in really what's going on with global finance, with economics, with the central bank stuff like that. And I love this stuff, right? I'm a boring person, I guess. I love this stuff, and so it excites me that y'all are really really getting into this, really excited about this. But that means that you have to get through all this initial stuff that's just thrown out there so easily online, because it generally is true, or has been true more times than it hasn't. But what you're looking at is the result. The result has been true, right? You're not actually looking at what are the mechanics underneath the hood that created that result. And that's where we need to get to, right? We need to get to more understanding. That's why I've spent a few streams in the past few months, kind of discussing about the differences of what's going on this time is what's happened before, and why it may show that we're actually headed higher and we're not, topping out the market just yet. So, yeah. So again, if we were to get involved in some kind of war of some sort, there's going to be an initial knee-jerk reaction, right? There's going to be that, just like the initial knee-jerk reaction today with what happened with the jobs numbers. Watch what happens on Monday, okay, or Tuesday of next week. And I'm talking about the legacy markets, the ones that are going to close obviously here in a few hours. Bitcoin's going to keep on up 24/7, right? But yeah, so when you sit there and you start looking, you go, okay, well, so maybe there's more to it. Maybe it isn't as simple as what everybody says, as far as that goes. Maybe there's different things going on underneath that could create a different outcome. And that's what we're looking at. And so as Brian brings up there, he says, Morgan Stanley embracing the corn. Yes, Morgan Stanley, guys. We've been talking about this a few months. One of the Beards and Bitcoin guys, Andrew, he's got his connections with TradFi. That's his old world. And Morgan Stanley was already talking about it before the summer. And then it got stalled in that whole, that whole big business kind of thing, right? It got stalled. But finally, Morgan Stanley, 15 somewhat thousand wealth managers they have there, guys, are going to be able to offer it, right? So people could come in before, of certain types, people that had a certain particular net wealth in Morgan Stanley could come in and say, hey, listen, I want to have an allocation in Bitcoin. But Morgan Stanley would not allow their wealth managers to go and say, hey, listen, you should have one, right? You should have an allocation. Now they're saying, listen, go ahead, guys, we're going to unleash you on them. You can do this. Now, that doesn't mean all of a sudden we see, 2 trillion, inflow tomorrow or something. These things take time, right? But the important thing is that they've seen what's happened already, and they've seen the money that people are making already. They've seen the returns already since the beginning of the year, right? So some of them are already on board. Others, especially if they're older, are probably going to need more convincing, and some of them may never be convinced. But the fact is, you're going to have 15 somewhat thousand people out there shilling Bitcoin, potentially shilling Bitcoin to high net worth and ultra high net worth individuals. That's crazy. It's really crazy, right? So we've got that coming as well. Let me see here. Let's keep on moving here. Bitcoin dominance continues to increase here. My count continues higher. We're potentially looking up here towards 60, almost 65% right now. And that's if this doesn't overextend even more here. Right now, I've got this 1, 2, a wave 3 minimum expected target up there around 58.47% right now. So if you watch the Investing Bros, by the way, you should, friends of mine, Tim and Mr. Shroom there, I think he's still in here. and his cohort there, Tim. They are the great guys. I love them to death. Tim and I, actually, it may have been on the show itself. Yeah, back there, I think it was at least a year ago. We were talking about the likelihood of Bitcoin dominance hitting 60+% at that time. And we took a lot of flack for that at the time. We took a lot of flack for that. But here we go, right? Here we go. We're almost there. And so it's been a great run for dominance for Bitcoin. We can zoom out here a little bit more. You can kind of see this bigger picture. I mean, look at that. From down there, look at this nice move up. So we're just kind of getting into this previous sideways here. So I like it. Again, I think we continue to go up higher there. So Bitcoin continues to look good overall. So let's jump into Bitcoin now. Yeah, Mr. Shroom is letting us know live at 3 p.m. Eastern on weekdays, the Investing Bros Show. And it's BROZ, guys. It's BROZ. So there you go. So here's the thing. So we were looking at the possibility of this being like, oh, Lord have mercy. So I've kind of adjusted the count here, but maybe like a 1, 2, 3, 4, and then we're going on 5 here, right? And then we're looking at how I have it laid out here. Now, my big issue for this is that the duration in time for wave 4 here, 580 somewhat days, is larger than, if this is 1, 2, and this is 3, 4, this is an interior wave 4 of wave 5, right? So if we look at this, if we go on here and we say, okay, well, this is 1, 2, 3, 4, and we're working on 5 here. Well, this is 1, 2, 3, 4 of that 5. Now, generally speaking, when you do Elliott wave, the duration of your interior waves should not be longer than your exterior waves. And if this is 2 and this is 4, that's 630 days and 364 days. But this is 364 days, right? This is 4. This is the interior of wave 4. So 581 days is longer, much longer, right? So that has me kind of looking at this going, well, maybe that's not the case. Maybe this is not 1, 2, 3, 4, and then this is 5 here. So what could we be doing here? Well, or maybe it could be, but here's how it would have to be. Even though this seems like a flat here, what if we're looking at something like this? Okay. Let's take that down one. And so if this becomes, let me just kind of, let me see how do I want to do this here. All right, let me get everything off here because I just want to go for it. I don't want to confuse you guys. I can draw this back in later. Whoops. Okay. So what if coming off the swing low, what if this is 1, 2, because this is what most people have, right? 3, 4, and working on that 5. Now, what if this becomes 1, 2, 3, 4, 5 here? And this then becomes 1, 2 here. Oh, gosh, dog it. Hit the wrong ones here. Yeah. So what if we've got this still moving here? Okay. So now our wave 4 and our wave 2 are interior to here, right? They're now no longer the duration. The duration is no longer less than, or I'm sorry, more than what we had here, right? Here we go, okay. Nope, that's less. And this is clearly less here. Well, this starts feeling better then. What's the pullback here? Pullback's going to be 50%. It's usually where we're looking for. Okay. So what does this mean in the grand scheme of things? Well, I've been talking for quite a while now about how what we have here looks a lot more like what we had here, 2011 into 2013. And what we would get like a double pump here, right? So if we're getting this and we're looking for price to extend into, say, Q4 of next year, well, all of a sudden, we could potentially be seeing something like this here. Let me see here. And so this, now this is without any kind of really strong rally. This is generally speaking, target of about 90,000, right? Now, obviously it could go higher. We're just saying, just based off the height of this pullback here, 89, 90,000. So what does this mean? So if we get 90,000, maybe push it up to 100,000, and we do that here in Q4 coming up, right? We push that up there. We top out there in Q4. So then we get the pullback, right? So then we get the wave 2 here. And we do this pullback into maybe Q1 of next year. Now that's a big pullback, 37.5. Scare everybody, right? But from there, then it plays off, and all of a sudden we start looking at higher for longer, right? But that's what it would have to be. This would have to be a 1-2 here. Because we've already broken out above this swing high here. So it's going to be another 1. So is it possible we get continuation for another year and a half, 2.5 years? And you know, it's a possibility. Again, not guaranteed, but if I'm looking at this, right? If I'm looking at this and I say, well, if this is 3 and this is a large 4 as a flat, which is what we've been looking at, is that the thing that bothers me is that this wave 4 is bigger in duration than than its parent wave here, right? It's you know, it's wave 4 here, right? I say parent wave here, but what I'm saying is this interior wave 4 shouldn't be longer in duration. This wave 4 here. It shouldn't be. So I have to look at it. I have to go, okay, well, what else could it be? Well, the only real thing that seems to make some sense here is that this is a wave 1 up here. That this becomes wave 1. This becomes wave 2. All of a sudden, those crazy kind of numbers for Bitcoin aren't looking so crazy. Now, will this happen or not? We'll have to see. We'll continue to play it as we go, right? Right now, I am most focused on what's going on here. So it looks, again, as we've been talking about, like we have a flat here for wave 2. If we do this, that's a 1, that's a 2. We're right there at the 1618. So we can default to a wave 3 here. A, B, C, 4, right? That pullback is almost 38.2. It's almost 38.2. So I'd say that's probably a 4 there. Now, again, what's going on here? So I gave you the target on that, right? But what if locally here, what if this becomes something like, let's see, maybe like a 1-2 here, 3-4 is a flat 5. Try this one more time here. Yeah. So this is kind of looking at here. Why? Because the same reason when I look at the Nikkei and I see this ABC. I mean, this looks pretty clear like an ABC here. So that would suggest to me a flat here. So if this is 1-2 and then this is 1-2, you know, 3, 4, 5, right? And then it gives us an ABC down, ABC up. We would get maybe a 1, 2, 3, 4, 5 here. Okay. By the way, you'll notice where it found support here. where it found support. Way across here, right? Significant area of support and resistance there. But if this is 4, guess what? This becomes 5. This chart is Bitcoin USD. Oh, this is the all-time index chart. So just so you're aware of what chart we're looking at when you talk about pricings here. But that potentially gets us up here around 75,000 and some change. But that should then just be wave 1 of 5. Because here's the rest of it. When we're looking at this range here, and we look at this volume and price action that I've talked about so many times before, this really appears to be reaccumulation. Same thing I've been talking about since way back, months ago, right? So if it's reaccumulation, then we're not just going to break out a couple of $1,000s higher and that's it and come back down. Also, what we normally have is we normally have a rally up into the swing high area a little bit before, a little bit after, and then we pull back, and then we get the big jump across the creek, our big breakout through the overall resistance. So this would kind of align with that, right? This would kind of say, yeah, that's what we're looking at here. Now, again, it doesn't have to hit 75,000, and it could go higher, but that's just the general area we look at as target based on the height of wave 4 here. But look at that wave 2, pulls us right into wave 4. We would look right here around this previous support resistance. And then all of a sudden, instead of just being 89, 90,000, wave 5 overextends here toward at least 124,000. At least 124,500. And that may just get us first wave up off there. But this is what I'm interested in at the moment, right? We have the larger counts. The larger counts are really kind of, I haven't found anything I'm overly comfortable with that larger count yet. But we can continue to do what we're doing locally and go, okay, we get a rally up to maybe, like I said, at least, 75,000 here, but then we pull back and then we get this rally up to, maybe 109 or whatever. And so maybe even this continues. Maybe we have a good end rally here. This continues through the end of the year and we hit the 123. But after that, it's just a pullback then, right? It's potentially just a pullback toward, let's see if I can zoom out here a little bit. At that point, at 124.5 or so, that wave 2 pullback, if that's what it is, comes back down here around 44,000. Now, potentially, right? That's the 50%. We could see it end up closer to 56,000 here at the wave 4 area. But you see all this low volume node stuff here? Okay, now we got everything here. So we see these low volume nodes. Those would be the likely kind of catch areas that we'd be looking for overall on that. So for now, I'm more interested in what's going on at this local area at the moment. So I'm looking for a rally to break out higher to give us a target up there of at least that 75,000 and change. That would give us then 5 waves up. Now that could be wave 5. That could be. Because it would be 5 waves up that breaks out above wave 3. But I don't think so. Again, this appears to be reaccumulation here, which means we should have it going higher for longer, right? And generally speaking, we would have a breakout or rally into that top area there of 1, pull back for 2 in the top half of the range. Wave 3 is the big breakout. Wave 3 is the big breakout through the real breakout through the resistance, through the supply, gives you your jump across the creek in Wakofian terms. Diego says, some people think any Elliott wave count is the final count and just trade it like it's written. on stone. Doesn't work like that. You constantly adjust when it gets invalidated. Yeah, exactly. So the way I teach Elliott Wave, guys, is think of it as a GPS in your vehicle, right? So y'all have used GPSs in your vehicles, right? And it tells you, listen, you put in your, you're where you're starting, you put in your target, where your destination, and it gives you a path, right? Now it tells you along the way, there may be road construction, there may be a road hazard, there may be some kind of detour for some reason, right? And it has to adjust your path along the way. Think of Elliott Wave the same way. When you first start out with what you think it is, your target is, okay, generally where you're expecting to get. But you should expect that there's going to be detours and changes along the way. And so as the count develops, you continue to develop your count. You continue to work on your count, right? To change it up a bit so that it fits in with what's going on. And I think this is where a lot of people get it wrong, because they're taught, when they're taught Elliott Wave, they're taught, listen, this is the way it is. And really, they're just kind of left to their own devices to believe that, oh my God, so wave 3 is here, that's where it has to be. And then that gives it difficulty changing what they're doing, right? It gives you a difficulty actually when things change, to actually change, right? What if you're getting, what if your wave 3 is subdividing and you're getting a larger wave 3? Because these are guidelines, right? 1.618 of wave 1, from the bottom of wave 2, that's your wave 3 target generally. But a lot of times it overextends. It gets to 200 or 2.618 or 3.618. And if you're very dogmatic in your initial target has to be it and that's it, then you're going to have a lot of trouble adjusting and being more fluid with your trading. And it's going to cause you to become very discontent with it. Elliott Wave isn't magic. Elliott Wave teaches you that human beings, they drive the market through their emotions, right? That's what it tells you. And that human beings are predictable or forecastable. Their actions are, because we tend to repeat, right? We tend to move away from our baseline to extremes of highs and lows, but then we come back to a slightly modified baseline. And so that plays out in the markets. That plays out in what's happening in the markets, which is why we're able to we're able to figure out targets along the way. That's what allows us to forecast, right? So this is what I'm kind of looking at now. Do we hold here? This was my initial target on the pullback. If you guys watch Cardone Corner or a few other shows I'm on, you'll know that I talked about this this area right here, basically 61,320 to 62,320 kind of area. And it was right here around the, I can't get it in there exactly, but it's right there around the channel EQ. Notice the pivot on the daily is where it hit. Notice we reset Stochastic RSI and oversold down here. Things are looking really interesting here. Let's kind of zoom in a bit. This is potentially a flat right here. Let's kind of zoom in a little bit more. Right? 1, 2, 3, 4, 5, ABC, ABC, 1, 2, 3, 4, 5 here. It's a deep flat, right? It's a deep flat. But so far, this demand structure right here is holding as support. Right there around the EQ. We got the bounce up. We bounced up to the previous, resistance here, support level as resistance. We just need to make a move up there. We got a large fair value gap here to get through. But if we can close above that fair value gap, which is on this chart here, is at 64, 549, 66. Right here. So this hourly fair value gap, if we can rally up and get an hourly close above that, this bearish fair value gap no longer works as a bearish fair value gap there. And we should expect price to continue higher. So from here, if we can get that, that's what we have to get, guys. There's always confirmations you need to look for. But that would give us 5 waves up right around 69,314, which is, guess what? Right around the previous swing high. Our first 5 subwaves should carry us up. The first wave should carry us up around the previous swing high. Another guideline with Elliott wave that isn't really ever taught. But most of the time, that's what we find. This one, it'll come just a little bit short here, right around the previous swing high here, rather than here. On the larger time frame, if we hit the 75,000, it takes us just a bit above it, right? But it's always right around that. Don't ever look at your, if you draw support and resistance levels, guys, don't ever look at it as exact. Understand that it's a range around that, right? Think of it as like a rubber band. Give it some room on either side, okay? By the way, here's another tip. When I trade, I don't wait until it hits my target to get out. I usually get out just prior to my target because you can be front run. And I would rather get out with slightly less profit than miss taking profit because it didn't hit that target, right? It missed it by 1%. You see what I'm saying? Try to incorporate that in your trading. If you go here, like if I'm looking here and I go, okay, I want to be long here, stop loss just below the swing low, because if we break down below the swing low, that it's not going, right? I mean, what we think is happening here is not happening here, right? But this is the way that you would trade this. You'd be like, okay, I want to go in. Let's say I just want to go in right now. Stop loss just below this swing low over here. Target 200% up there. That's almost a 5R return. I'm more interested probably getting on closer to about here. Leaves me a little bit less profit, but just in case this is front run here, I'm still most likely going to get out, right? If I'm looking here where the lower volume node is, I could even pull it back a little bit more there. About 4.5R on that. Not worry about it, because you will get front run a lot. Now, there's the other possibility it could break out a bit higher before it reverses, and that's fine. I'm okay because I locked in 4 or 4.5R right here. It's okay that I don't get an extra half or even an extra 1 on that. I got most of it. That's what I'm interested in. I'm interested in getting in, making some money, and locking in that profit. But if you're always looking to get exactly where your target is, you're often going to find yourself falling short. And instead of taking profit, you'll probably let it come against you and hit your stop loss. So not only will you not take profit, but you'll also take a loss. Why do that? The name of the game in trading is not hitting the ball out of the park. Pay attention here, guys. This is one of the most important things you can learn about trading. The name of the game in trading is consistently locking in profit. Because as long as you consistently lock in that profit, time and compounding is going to do all the work for you. The more times you lock in profit, the larger your position size if you're using proper risk management. Now, that's the whole thing. You got to learn this, right? You got to learn proper risk management. But the more profit you lock in, the larger your next position size can be. Larger your next position size is, if you're making profit on it again, the larger your profit's going to be, which means the next time, the larger your position size can be. You see how this works? Stop trying to knock it out of the park tomorrow and turn $100 into $1 million this week. Understand that trading is a marathon. It's not a sprint. It's something that you do over time. And the more you can understand that, the better you can, the more of a chance you're going to have to do better over time. And that time and that compounding is going to add up. It may be slow at first. It may seem like it's slow at first, but it's because you've got a little bit of money. But you keep at it. Keep working on the process. Just focus on the process, not the dollars. If you focus on that process and you're consistently locking in profits, I mean, you're going to get profits every time, but you're consistently locking in profits, which for most of you, honestly, is probably what you're not doing right now, right? I didn't do it at first. First few years when I was learning how to trade, I missed a lot of times. I should have just taken the profit and go with it. But if you can do that, right? If you focus on the process and you focus on your risk management You stop worrying about how many dollars you're going to make on that trade, which is what people tend to do when they have a very small balance, a very small capital account, because they're like, oh my God, I have to make this money, right? If you're in the market and you're doing it because you think you have to make the money, don't waste your time in the market. Go find a second job, a side hustle, something, because it will force you to take really bad trades. It'll force you to get into trades that you have no business being in, and you're going to lose your money anyway. So if you're in a situation where you really need to make money, focus on making the money. I don't care what it is. Mow lawns, do whatever, guys. There should be nothing beneath you to make the money that you need to make sure that your monthly expenses are met. Once you can do that, then you can look at trading. And again, I'm not saying that for any other reason that if you come into trading with the mindset that you have to make that money to pay some bills or something, that if you don't, you're going to be SOL, then it's going to make you very emotional. And being very emotional means you're going to take very, very poor trades. Because you're going to try and do that. You're going to try and constantly get in instead of waiting for the right opportunity. You should never get in just because there's a chance. You should be looking for higher confidence trades. And that's going to lower the number of trades you take. But that's a good thing because it means you're going to take a lot less bad trades, which means a lot less money that you have to make up. Okay? These are the things that we discuss all the time at TWC, our group coaching, because they're the things that we have to figure out. They're the things we have difficulty dealing with as traders. They're the things that keep us, that hold us back from being the traders that we could be. If we don't focus on these things and we focus on the other things that everybody else focuses on, then you're going to get what everybody else gets. And what do we know? We know 95+% of traders are unsuccessful. Retail traders are unsuccessful. We know that. So you have to do something different than what they're doing, which means you have to focus on the correct things. I try to help you guys out with that here each week when we're on here, but there's so much to it. There's so much more to it than what you get here. You can get in our group coaching. I'm telling you now. If you really are serious about trading, it's where you need to be. You know, I teach you things that nobody else out there teaches you because most people don't understand it at that point. People can teach you how, you know, if price goes here and does this, then do this thing because it might go here. I can teach you that. You might even become an okay trader. Maybe. But if you truly understand how and why the market's moving like it does, if you truly understand proper risk management and why it works the way it does, if you truly understand all these other things that I talk about, these mental side, the emotional side of it, right? And you get an understanding of it, which means you get an understanding of yourself, then you become the trader that you want to be. Then your odds of being successful are significantly increased because you understand what's going on under the hood, not only of the markets and the price action at the time, but of yourself. Anybody can learn the steps on how to do a specific trading system, but if you don't deal with the other emotional side of it, the psychological side of it, if you don't get an understanding in all of that, you're not going to listen to the rules anyway. I promise you. And you've probably, experienced that already in your life. Again, guys, I don't talk about anything else that I haven't already had to deal with myself, right? It was tough learning to trade at first because I didn't give it the seriousness that it deserved. I'm a smart guy. I just figured that won't be a problem, be real quick and easy. But I didn't learn it on my own, and most people don't. Most people go to a coach or a mentor or something, just like any other skill set, guys. Y'all act, a lot of people out there, retail, they act like trading is this thing just because they can do it, just because they can put money into it and do it, that they don't have to have, anybody helping them. But everybody that's ever become great at something right? Really great at something. Pretty much everybody has had some coaches and mentors along the way. Think of your professional sports players or your professional actors or whatever you want to think of, whatever the skill set is. There are some people that will make it without help. I wasn't one of them. And most of you will not be one of them either. That's life. So you have to decide, are you willing to take that chance and potentially lose all your money along the way? Or are you going to find somebody to help you along the way? And I hope because you're here listening to me that I'm one of those people you listen to, because I'm never going to blow smoke up your rear end, right? I'm going to tell you the way things are as I see them, not what you necessarily want to hear, because I'm not helping you at all if I'm just telling you what you want to hear. So yeah, so I think right here, this is interesting where we're at right now. You know, do we get the rally up and out of here? I don't know. This is a pretty deep pullback into this order block down here. It's a pretty deep pullback. We'll see. You know, right now we're getting caught on this 15-minute fair value gap here. Then we got another one up here, which is around where the 1 hour one is up here. But if we can close on the 1 hour above this kind of, on this chart, again, that's the 64, 549 and 66 cent area, then I would expect us to continue up higher. I would expect that wave 4 is probably done here, and we're heading up now toward, again, that 69,300 and change area there with that. If we do break down further, here's the other thing that I've been telling our students. I don't know that I've ever mentioned it outside of the thing here, but if, let me see if I can find my thing here. Oh, there we go. So we can see here that the current pullback here is just beyond the 38.2 retracement. So that's our initial wave 4 target. Our secondary wave 4 target is the 50% level, which is right around 61,000. So if we were to break down, I would initially be looking at 61,000 as the next target area. Let me see here. And potentially even 60,300. Get a really kind of a deep wave 4 there. So that's what I'll be looking at if it does fall back into it. But as long as we can rally up and break out here, again, we'll be looking up there. And then, of course, looking at how this plays out. And again, here's the crazy thing. You know, if we're looking at this and we get this 69 as a 1 up there, right? Well, what does that mean? Well, that would take us then, let's see here, from right here. Yeah, it would take us from the 50%. Instead of 1 being here around 75,000, 75 and a half, we'd be closer to around 81,400 or so, 300 on that. Okay. So we just have to see how this plays out inside here. And this, of course, is what I update, you know, throughout the day for our members over there, Texas West Capital. And you can join us, guys. You can join us. The links are below if you want to do. If you want to get involved with us, try it out in there. You can definitely jump in there. I've got a system that I'm also just launched recently as well, Liquidity Pulse. So you can jump on with that. There's a code below here, or if you're on X, I think I've got a pin there at the top of my profile. But use the code as long as it's still working. You get a huge discount off that. But you can learn a simple rules-based system without any indicators that works out quite significantly well once you learn it. And, you know, it's a step, right? It's a step. You know, the goal is to, if you're not willing to jump all in and learn everything else that you want, that you really should be learning about trading, the goal is to find a system that's simple enough to understand that you can employ over and over and over again. And you know what? Honestly, guys, the reason I'm doing that is because hopefully you'll get into it, you'll dig it, you'll see that, you know, that I'm not BS here, and you'll join our group coaching because, again, there's no way it can't make you a better trader if you put your effort into it. But we're going to teach you all those things that nobody else out there is teaching you. All those things that people are out there, have been screaming. The things that people have been screaming, there's a recession for the last 2.5, 3 years, or there's a depression month after month, keeping people from riding the rally that's been up in all the markets. Those are the same people that kind of scream those things, the ones that don't really understand what's going on underneath. But the most important thing about trading, guys, is that there are no guarantees in trading, other than you will lose money from time to time. And the newer you are, the less experienced you are, the more money you're going to lose more often. Okay? There is definitely something to be said with markets with time and seat. Time in your seat, watching the market, being involved in it. That's experience that nobody can teach. But the goal is you don't want to spend 5 years throwing money down the drain. You don't have to. You shouldn't want to. You don't have to. So, whether it's me or somebody else, find somebody that you trust that seems to know what they're really talking about, honestly, and be a part of whatever they're doing so that you can become a successful trader. Because otherwise, what the hell are you doing here, guys? Seriously. I mean, again, I'm not going to tell you what you want to hear. I'm going to tell you what you need to hear. What are you doing here? Right? If you're not here doing everything you can to be the absolute best trader you can be, to be successful, why the hell are you even putting your money in the market? People like myself and others out there, we'll take your money all day, every day. Nothing against you personally, but man, why would you want to do that? You don't have to be like anybody else. You can be successful at it. But you got to find the right person to get with. And then you have to put in the effort. Because no matter what myself or anybody else tells you, if you're not in the right mindset, if you don't believe you can be successful at it, you won't be. It all starts and ends in your head. Not just with trading, but with anything in life. Life is all about how you perceive yourself and how you perceive things that are happening. If you are a victim in life, if you have that mindset that everything happens to you, rather than, just understanding that it's life and there's things happening and you have to figure out a way to deal with it, then when you get into trading, you're going to bring that same mindset in there. And that'll keep you from being successful. You can't be successful if you believe that you're a victim in life. Because in trading, you have to believe that you can win. You have to believe that when you put your money in to take a trade, that you've got a good chance of winning. Because again, otherwise, what are you even doing? Stop. Just buy Bitcoin, hold it, find a way to make more extra money, second job, whatever else you're looking out there, side hustle, something, create a business, do something, just make money and buy Bitcoin and just hold it. That's the reality. Nobody out there is going to tell you this. Nobody else out there is going to tell you this. Why? Because at the end of the day, all they care about is selling. All they care about is you paying them. They don't care about the churn. They don't care about that. I don't want you joining us if you don't have the right mindset, because it's going to be a waste of money. It will be a waste of money because you won't put the effort that you have to put into it. Okay? But if you're serious about it, you really want to learn how to do it, join us in some way. Keep watching me when I'm on. If I'm on here, if I'm on Cardone Corner on a Tuesday or something, heck, even join Spaces. I host Spaces there with Gary Cardone and Samuel on Mondays. Join it. We do Beards and Bitcoin on Wednesday. Watch it. You're gonna pick up a lot of just general ways of understanding markets and people and things that are going on, and hopefully understanding yourself. Because if you're here following me, I take that seriously. I want you to be freaking successful because it makes me feel good. Not because I'm, some altruistic person. I'm not. I promise you. I don't do things just because they'll benefit somebody else. And most people don't, and that's okay. Just be glad they're doing it. Doesn't matter what, I do these things because they make me feel good. When you get all of me, you say, man, Chris, it clicked, man. Oh my God, I figured it. It just all of a sudden it makes sense. And that happens. And I get those kind of comments from our students, and I love it. It makes me so freaking happy. I'm high off that. That's why I do it. Doesn't matter that I don't do it just so you can be better, right? Does that make sense? Be glad that I do it. Be glad that anybody does it, the things out there. Okay? JP, man. Hey, buddy. Yeah. You know what? Do you have Twitter? He said he dropped out of TWC for a while due to life events, but interested in coming back. Login no longer works. Yeah. Hit me up. If you're on X, hit me up on DMs over there. If not, you can join us over there at members.texaswestcapital.com. Just join the free site over there and send me a DM. And I'll figure out where your account is and when you were in and everything. When you say it, login no longer works, I don't know if you mean at our current place that we've been for about a year now, or if you mean prior to that, because we had that move from the other platform. So yeah, just go ahead and do that. But anyway, guys, listen, that's going to do it for today. As always, I talk about the charts, I talk about the markets, try to help you get an understanding of underlying things, because I know y'all are still infatuated with, with understanding recessions and jobs numbers and all that kind of stuff. But what I really hope you guys got the most out of today was that other stuff I talked about the importance of how you're approaching markets and how do you approach life, and the importance of approaching it in a specific way, because it will carry, however you are in the rest of your life, is going to carry over to your trading and everything else you do. So you have to be positive about life. You have to understand that you can affect real positive change in your life, that you're not just at the behest of whatever happens. Life happens. It's not about what happens to you. It's how do you respond to it. And once you figure that out, and once you get positive about that, your entire life changes. I promise you. It really does. And it's going to make your trading a lot more successful as well. You'd be amazed at how much your mindset plays a part in everything that happens in your life. Okay? So there it is. Yep, Frank over here saying, what'd you say there, Frank? Worth every penny? I love it, man. Diego says, join TWC. These are guys that have been in here with me a little bit. They know what I do. They continue to be a part of it. I think one of the best things we have is that people continue to stick around with us. We have little churn, which is different than most, educational kind of companies out there. Most of them, people get in and they churn out. It's always constantly changing. But we've got a great group of people that sticks around with us year after year. And it's because they get value out of it. So, I can say all day what I think about what we do there, and I'm always trying to make it better, but these are guys that are actually in there. So there you go. Soren, what's going on, buddy? Good to see you. Peter says, we are outstanding. I appreciate you, man. And everybody else. Hey, listen, guys, as always, remember the only thing you control in the market is how much you lose, okay? So no matter what you're learning, whether you come in and learn Liquidity Pulse System with me, or you come in with our group coaching and learn a lot more, or you go on, you learn somebody else's system of trading, at the end of the day, the most important thing you're going to do day in and day out as a trader is your risk management, period. End of sentence. There's no two bones about it. Okay. And I'm telling you this as somebody who's been doing this for 30 years. I still work on my risk management every day, because it is the one thing I control beyond anything else. And so even just the slightest bit better I can get at it, the slightest less money that I lose on a trade, right? Because I'm learning how to get it better and better, exponentially greater that return to me. So don't forget that, guys, okay? All right. As always, I appreciate you guys showing up. Hit the like, leave a comment. If you got questions about the charts I put there, leave comments about it. I'll do my best to answer them as clearly as possible. And at the end of the day, you don't have to agree with my charts either. But the fact that you're here and actually listening shows that you've got a lot of greatness going on for you, because you're able to entertain something that may not agree with what you're already looking at, but you're able to actually listen to it and digest it. Doesn't mean you have to agree with it. But having that openness and being able to do that, not only does that affect you positively as a trader, but it affects you positively as a human being. Because again, as I said, how you are in one part of your life will flow over into the other parts of your life. So everything I teach, when it comes to trading, is always applicable to the rest of your life as well. All right? All right, guys. You guys have an amazing weekend. Trade safe. And I will see you guys. Hey, listen, I should be on Cardone Corner next Tuesday. I believe that's going to be a weekly thing now, at 11 a.m. Central, 12 p.m. Eastern. Beards and Bitcoin, I do apologize for missing it this week. Had all the stuff going on, and my calendar got completely screwed up. I didn't even realize until 10 minutes before that I had multi-booked that time slot. So we'll be back next week with Tillman and Andrew. And so we'll be talking about it next Wednesday at 11 a.m. Central, 12 p.m. Eastern. And then, of course, next Friday, I've got you guys back here, and hopefully you'll come back, okay? Have an amazing weekend, folks. Take care. And you know what? Get away from the charts. You got to take some time away from the charts, guys. Otherwise, you drive yourself insane. Take care, everybody.